Hey, my name is Suresh Padipandla. In this channel, I discuss a lot about different types of passive income and what are all the strategies I use to get out of the 9 to 5 job and also to gain financial independence. And today's topic is whether one should invest in stocks or real estate. Whether to go for stocks or real estate is something like, we have to look at different aspects. So we'll start with the first one, liquidity. When liquidity is concerned, I think everybody knows that stocks is really highly liquidable. Like, you can get your money back within a day after you sell for you to withdraw. And whereas in real estate, liquidation is really, I would say, low to medium because it takes a lot of time to list your house. And until you get cash, it's going to take at least on average 60 days. So, I mean, 1 day to 60 days, big difference, definitely. The second aspect is cash flow. As you know, cash flow is really almost like nothing in stocks unless like you buy some dividend stocks where the payout is also very low. As in real estate, if you really buy and maintain right rental property, at least like you can start with few hundreds to almost you can go to 1,000 on single property. So that's really the winner here in the cash flow aspect is real estate liquidation in stocks. The third aspect of this is risk control. Risk control is very low in stocks, meaning like you can buy any stock within seconds. So without due diligence, if you buy some stock and lose all the money. So the control for risk here is very low, meaning like, your friend would have told like, hey, this stock can go really big and you would have bought that and you go into mobile and then buy that stock and then boom, next day it can go down. So the risk control is very low. And when it goes to real estate, buying real estate will not happen in single day. If you really, I mean, you have a lot of time to get that property in your name and you have a lot of time. So basically the time it takes for you to acquire or even selling, right? You don't really like stocks, you don't take decisions instantly, but you take a lot of time to buy and sell. So that's where I believe like risk control is really high in real estate, whereas stocks has very low risk control. And the next aspect here is entry cost. Yeah, stocks you can start with $1 or stock investing with Robinhood and all. As for real estate buying, you need at least thousands of dollars. A primary home require at least like 15 to 20K investment. Here, stocks big winner because for you to start investing in stocks, you don't really need big money. Whereas real estate is not for all the beginners. It requires a decent money to be saved before you even think about real estate. So here, the starting aspect, I would say stocks really wins the race. And the next aspect here is tax and tax benefits. You really don't have much tax benefits in terms of stocks, but real estate, you have really various aspects of tax benefits. If you work really well, you can really avoid paying taxes for 27.5 years if you use depreciation, or even after that, if you use 1031 exchange, you can even avoid beyond 27.5 years with the living trust and all. You can inherit that property to your kids without paying a single dollar tax on your home, and then they can on step up cost basis. They don't also have to pay the taxes. Tax benefits are a really big topic in the real estate concern, whereas in stocks you really have limited tax benefits, and the winner is real estate for sure. Whereas the next aspect here is stress level. So the stress level in owning stocks is really low, and owning real estate, I would say medium, because like it's a big thing, right? So definitely there is so much cost involved owning real estate, because so if you have $100, you put it in stocks and forget about it and you're good. But home is not like that. So I would say stress level is medium in real estate, whereas stocks is really low. Again, there is another aspect of this stress here, market volatility stress here. So market volatility stress in stocks is really high because I've seen a lot of people, even I did the same in the beginning of the stocks investment. So we really check our portfolio daily, and for smaller corrections also we really stress ourselves a lot. The amount of satisfaction or joy we get when we make profits in stocks versus the stress we get when we lose is really high. So it does not have a correlation. So I would say the marketing volatility stress levels are really high in stocks. Whereas real estate, let's say you bought property for 50K and it becomes 500 or 300, it doesn't matter because those values only matters when you're selling, like, down the line, like 10 or 15 years or 30 years, or maybe you never sell. You don't really worry about daily fluctuations as you do in stocks. Even let's say you're not watching your stocks daily, but monthly ones, then also you almost feel like the stocks gains or losses are realized even though you don't really sell. But whereas real estate, it doesn't really make you feel likewise. So that's where I feel like market volatility stress levels are really high in terms of stocks, whereas real estate it's very low. And let's do a comparison, right? In this episode, like, let's say you start with, I mean, just for to make the math easy, let's say you have 80K and you are debating whether to invest that 80K into stocks or whether to buy real estate with that, a rental property with that. So let's say you invested 80K into the stocks, there's 8% return on that for 10 years in, like, you put it in S&P 500. To keep it very simple, probably you may make it higher, but at least, like, to start with an example and take an industry standard average 8% on S&P 500, you get at least 93,000 profit there, and it can be upward towards, like, probably 110K if you make it 10%. But yeah, it's between 90 to 110K in terms of stocks after 10 years. Okay, let's take the same 80K, put it into real estate and see how it is performing over the 10 years. You take that 80K and go and buy a 400K property with 320K loan. Assume you're at least making $500 cash flow. Otherwise, I wouldn't really recommend. So you should really look for property which generates at least 500 cash flow. So that 500 cash flow will be 6,000 a year. And then if you look after 10 years, it's going to be 60,000 if you just like put it into savings account. Again, if you really invest that 500 again into S&P 500 index or something like that, you would be making more than 60,000. But at least to keep the math simple, I'm considering the cash flow after 10 years as 60,000. And then out of that 320 loan, your tenant would pay the rent. In that rent, there is some portion goes for your principal. And that will be like, again, take it as a 500. It will be more than that over the 10 years on average, but at least, like, for an example, right? Take it as, again, another 500 towards your principal. At the end of the 10 years, you would be again paying down at least 60,000 principal. That's again your profit, right? So now we are already 60,000 cash flow and 60,000 paid towards principal by the tenant. So you're at 120K. So the another aspect here, right? Consider, like, with the inflation, there is at least 3% appreciation on the house on average. So keep it simple, right? So every year 3%, 10 years 30%, 30% of 400K is 120K. So you already have 120K from cash flow and equity, and another 120K in appreciation. So total 240K at the end of 10 years with the 80K investments, you were able to generate 240K in real estate compared to what 93K to 1K possibility in stocks. So that's the whole difference here, right? You have a leverage here, like, your principal is CK here in real estate, but the amount of investment here becomes 400K because you're taking leverage in your favor. So that's where real estate becomes street aspect. Again, you have to play really well, and I agree you need a good decent amount. 80K is not small amount to start with, right? So real estate need a decent capital to start with. But really, if you have that money, if I have 80K, I wouldn't really consider doing stocks, but rather I would really put that 80K and buy a rental, because at the end of the day, at least it really gives me freedom at some point to really remove the dependency on my day job. So that's why I like real estate. But again, whatever the cash flow I'm getting 500, again, I can put that money into S&P. It's not like I don't like stocks. I really love stocks because the way I use my money is like I try to accumulate my small earnings into stocks, and then I have a good decent cash that I can go buy real estate, take those amounts where at least because I put it into S&P 500, I never have problem, worrying about whether my stock gained or not. Since I'm putting into index fund, when I get a decent amount required for my real estate, I take that money and buy real estate. This is the strategy I am following, but you may have a different thoughts. So I would like to know your thoughts. Let viewers learn from the best. So let me know your thoughts in comments. Thank you for listening. Signing off.